Hey guys, John deRoulet, Head of Revenue Management Education here at Wheelhouse, and today we're going to do a data deep dive into the Galveston, Corpus Christi, Texas coast area. We're right in the beginning of summer, really solid booking window time for you guys. We wanted to give you a little overview of what's going on in a couple of these markets along the Texas coast. We've been doing these data deep dive town halls on a regional basis pretty consistently. This one pre-recording for you guys so you can access later. But keep an eye out for these data deep dive town halls. It's a great opportunity for people to get together, have a conversation about strategy, what they're seeing in their portfolios, and also look at some market data with me. Before we get started, I do want to tell you a little bit about Wheelhouse, although this isn't going to be a big product call. We're going to dive right into the data. But just so you know, Wheelhouse is a pricing and revenue management platform. All of the biggest enterprise clients work with us. We've really built for professionals, and we offer training and service so that anyone from property manager to professional revenue manager can use us effectively. In addition to that, we've recently released our portfolio and performance insight tools for free for everyone. So this is a great way to see market data, to see your own pacing, to see how you compare year over year and compared to the same time last year, and really be able to see that across any group of your portfolio in a really simple way. This is now free. So we're going to be talking a lot about pacing on this data call. If you have a hard time seeing your pacing or you need some tools to be able to see it quickly and be able to make decisions, let us know. We'd love to get you set up on this free business intelligence tool. We'd also provide some training as well as some training on processes on how to use this. All right. Enough about the product. Let's dive into some data. Okay. So today we're going to be using Wheelhouse's market reports to get some high-level trends viewpoints into a couple of these market areas. Wheelhouse market reports can be found here on the upper top limit. This is a free product. So whether you're a Wheelhouse pricing client or not, you can access our market reports for every market around the world. These are also accessible for anyone who just signs up and has an account. Additionally, anyone using our free portfolio analytics tools can access this data for free. Before we jump into this data, however, I do want to pull up a few things that I found around the market. So one of the things that I found interesting when I was looking at Corpus Christi and Galveston is actually right here on the Corpus Christi Visit Corpus Christi DMO page. I always like to look at some of the other data sources that are available. One, it helps me kind of get an idea what else is going. Two, for you who are talking to owners, I think it's exceptionally helpful to have multiple data sources telling a narrative when you're trying to get your owners to understand what's going on in the market. They're much more likely to kind of trust when multiple people are saying similar things. Additionally, you have the opportunity to kind of give some support to what your professional opinion is. Now, this Corpus Christi DMO page has some pretty cool data. They're trailing a little bit, but they do give monthly data reports here for pretty much every month. And what I have pulled up is this April 2025 report. This report's pretty awesome. It's from April 2025. It's coming from their data science. There's a whole bunch of stuff here. They give you some great highlights, but the nice thing about this is it's going to give you information on both hotel and short-term rental stuff. So this is a great thing to pull little tidbits out of because you can get an idea of really what's going on and give people a really broad view of how the market is doing. The main thing I wanted to show you here, and we are trailing a little because we're only up through April and it is June now, but it does give us an idea. The big benefit here, and this is why I'm bringing this up for everyone, not just the people in Corpus Christi, is when we look at this hotel review, it's going to give us how things are going, right? And so when we look at this, pretty harsh month of April, honestly. You can see Corpus Christi is down in occupancy. It's also a little down in ADR, resulting in a pretty big RevPAR decrease. They do show the year-to-date stuff for hotels as well, so you can see while occupancy was down substantially in April, it's only down about 10% total year-to-date, which is still a pretty big adjustment. Hotels aren't moving their ADR much. It's just there's not quite as much demand coming into the space, and there's a little bit of extra supply. Now, where this becomes really, really helpful, that was February. Where this becomes really, really helpful is they do break down the last few months. April was actually a bit better, but you do also get to see the other outlying areas in Texas. And this can be exceptionally helpful because you can see, one, if you're not in Corpus Christi, you probably can find your stuff here. Galveston is right here. You can see February was pretty brutal for them. Almost everyone in Texas was down in April, except for South Padre Island and Corpus Christi. But you get this nice view where you get the last 3 months where you can give people an idea of what's going on. And you get to see all the different markets. So whether you're in Corpus Christi or not, this is a great free resource for you to get an idea of what's going on in the hotel world, kind of across the board. In addition to that, they also give you this data for short-term rentals. So you can see here, this data is coming from Key Data, which is super great. They give you the same kind of viewpoint here. So we have February, March, April. They're giving us the year to date, and they're also giving us multiple markets. And the first thing to note here is in the short-term rental space in particular, hotel performance was kind of mixed, right? It's year to date, it's down about 5%. There is some new supply in the market, and they're not really shifting on ADR. When we look at the short-term rental side, we actually see a pretty big increase in occupancy, but overall occupancy in the area is pretty low, right? So year to date, not a ton of occupancy in those first few months of the year, those first, first quarter going into the second quarter. ADR is down a little bit. So you can tell that people are really trying to drive this occupancy, but the occupancy situation is there. When we look forward to April, you can see a lot of that occupancy being kind of driven in April and across the board. So that occupancy situation looks good. We're not giving up a ton of in ADR either. So that's a pretty good first quarter kind of viewpoint here. But this isn't the primary place that your occupancy and your money is going to come from. So that's going to be pretty key to understand. Now, also interesting to look here is these Texas markets are really mixed. Galveston, not seeing the same situation. Occupancy is down across the board, except for in April, where we see a pretty big jump. They also are pushing their rate. So despite occupancy being down a little bit, you see these rate pushes. So kind of mixed situation for Galveston. Looks a lot different than Corpus Christi. Same thing with Port Aransas. Port Aransas is down, rates are up. Port Aransas is up, rates are down. Port Aransas is up, rates are up. Very mixed situation in Q1 here across the short-term rental space, but this is nice because you can see what these different people are doing, and to a certain degree, you are competing with different properties. So that's the first thing I just wanted to show you, just give a little high-level overview. This can be found on the Corpus Christi data reports page. Wonderful resource for anyone in any Texas market because you get this nice view of both hotel and short-term rental across the state of Texas. Super awesome. So let's go ahead and dive into some of the Wheelhouse data and really dig into what we're seeing across these markets. We're going to start with Corpus Christi, and then we'll move over to Galveston, Houston. You can see here for Wheelhouse, Corpus Christi area is pretty big. We're including both Corpus Christi and Port Aransas when we're looking at this general market area. If you're using Wheelhouse pricing, we do get much more granular. We also have tools available that allow you to dive into and build very specific sets of listings so that you can access that market data. But for now, we're just going to stick to this kind of like high-level trend so we can get a general idea of what's going on. And the place I'm going to go to do this is under our Trends tab up here in the upper left. The first place I'm going to start is adjusted occupancy. That's going to give us month over month, year over year occupancies. And this is just a great idea to see how demand is in the market. First things to note here, I'm going to click off 2023 and 2026, and we'll just look year over year. But you can see some of these things kind of showing up. January looking pretty strong here with increased market occupancy. February remaining pretty stable. March remaining pretty stable with a little bit of a bump up there. There's normally like a spring break boost for March. And then in April, you see a slight increase. So we do know that Easter moved. We're not seeing a huge impact from that overall. But generally, things have been pretty stable here in the market. And that goes all the way through May, where these market occupancies are staying pretty consistent. That's a good thing. Q1 was really tough for a lot of markets in the Southeast. Spring break really didn't come together across Florida and Alabama and Georgia and the Carolinas the way people expected. But looking here in Texas at Corpus Christi, we do see a lot of stabilization. Now, something to note is that market occupancies here are a lot lower. So there always is quite a bit more vacancy here than you would see in some of these other markets. So there could be a feast or famine thing here. You really have to pay attention to how your own portfolio is pacing. You know that the market's remaining pretty stable from an occupancy perspective, but that because there's so much vacancy at the market level, you can see this March is only at 41%. There's a lot of people who go unbooked. And if other people are taking market share, it could look like you're down quite a bit year over year. Now, The big question here is, how is June and July pacing? June and July pacing is going to be the big one because that's where most of us are making our money. You can see occupancies are much higher. There is still a lot of vacancy, so you can have that feast or famine effect. And it looks like occupancy is in a pretty good shape. We're at the beginning of June right now, 46% on the books, really only about 11% of the way to go to match last year's occupancy. And for July, we're at 29%, so a little under 50% with almost 60 days to go. As for the pace, there's a little trick here if you're using this market data that you can do. Basically, I've calculated the pace here by going to our historical tab, going to lead time, and under these lead time distribution charts, we can kind of see roughly the percentage of stuff that was on the book. So if I go to June 2024, I'm looking at 25 to 30 days. We had about 40% left to book. So 60% of what was on the books by then. If I go back over here and calculate what last year's occupancy was, so 57%, and multiply it by 40%, I can get to where the pace is. I've done this for you for this. So when I'm looking at the market, last year at this time, the market was at about 41% in Corpus Christi. And for July, the market was at about 25%. So that's actually a very good sign. That means the market is pacing a little bit ahead this year. There's probably some opportunities for people to take market share. And things are not looking doom and gloom if your properties are in Corpus Christi. So really solid. The next thing I like to look at here is I like to just check using this performance filter what the highest performing listings are doing, just to see if there's some differences in overall trends. In this market, a market that's been pretty stable, I wouldn't expect the differences to be too big. When you see a market under pressure, sometimes you see very different trends from the high performers because they're doing something different than the market. In this case, we see the trends are pretty similar. The big difference is these occupancy rates are much higher overall in the highest performing listings. Q1, pretty stable, a little bit of an increase in March and April, so a little bit better performance in that spring. May looking pretty good, and then overall pacing looking really, really strong still for June and July. Now, the last thing I kind of want to check for you guys is the asking rates tab. So the asking rates are really interesting because this is going to be the averages of how people are posting rate in the system and across all the OTAs. This will give us a good idea of like what the market is doing from a pricing perspective. And you can see here as we look at January, February, pretty stable, not really pushing the rate too much year over year. March, we get a little bit of a push, and April, a little bit of a push, which is kind of surprising. I think we saw a little bit of, we saw stability here. So able to capture a little bit more there. Now, granted, keep in mind, there is a lot of vacancy. So it does surprise me that the rates are pushed here. That means that people probably are moving around market share. Even though market demand stayed pretty similar, there's a lot of vacancy in the market. So your goal here really would be to steal market share. I'd be really curious to see if the highest performing listings that remain much higher, you can see they really haven't been pushing their rate. They've been dropping their rate or keeping it in line year over year. So there is a level where that conservative pricing is paying off a little bit because the rest of the market is pushing and there's a lot of vacancy in the market. That trend stays pretty consistent as we get into June, July, and beyond. The rates are pushing a little bit year over year. This market is pacing a little ahead, so that's actually not a bad thing. But it does mean that if you are pacing poorly, there's some opportunity here because the market might be priced a little high, and all you have to do is really undercut them. If we look at the highest performers again, you do see the same trend. The highest performers in the market are pricing more conservative to last year. They are not pushing their rates up here in the summer. There's obviously a lot more occupancy on the books for them. They're definitely pacing well, and they are being more conservative to drive that. So there's kind of a marker here. If your pacing isn't doing good, really check to see how you're pricing compared to last year overall, because you might just be pushing a little too high and someone is stealing your lunch, so to speak. Okay, let's jump over to Galveston. And when we look at Galveston, this market area is going to be pretty broad in Wheelhouse. You can see that we're actually covering both Houston and Galveston. We're going to take a look at this data and just see what's going on at a high level trend. Then we'll also jump into something that's a little tighter around just the Galveston properties that are available. So first thing to kind of note here is we're going to hop over to the trends again and take a look at these occupancies. We just came off Corpus Christi, which was looking pretty good. But these trends look a little bit different, right? So you still see that January, February looking pretty strong across Houston and Galveston. But instead of seeing that maintain or get a little better, we actually see March and April fall off a little bit. April's really fascinating because it actually falls off more than March. That means either spring break stuff wasn't coming in or Easter really didn't drive a lot of occupancy. We can actually check that. If I go back to this historical view and I put on year over year, we can take a look at where that occupancy was different. So if I zoom in here, really the main thing here is, interestingly, this year, so green is last year, red is this year. We're missing a spike here, but we get another one here. So March is looking pretty strong. We're pretty much consistently down across the beginning of March. And while we got some occupancy around Easter weekend and the other weekend, it really didn't drive any extra occupancy over what it did the previous year when Easter wasn't there. Now, what's really interesting to me is that March was down a little bit, but we still actually have quite a bit more demand and an extra peak. My guess here, too, is that we're also seeing a loss in ADR. So really competitive environment, not quite driving the same way that Corpus Christi was doing. Now let's go back to this trends page and talk about summer, because summer is really going to be a big spot for us. We really need to know how that's doing. There is not near as much on the books here as when we were looking at Corpus Christi. We're at 30% on the books, so a little over half for June. Keep in mind, Corpus Christi was almost halfway for July and well above that for June. And July, really a small amount on the books so far. Really only about a quarter of what was on the books last year is here. When I pulled up the pacing using that same pacing method I did for Corpus Christi, last year at this time, Houston, Galveston was at about 33% occupancy. So rather than pacing ahead, it's pacing slightly behind. That 3% is equal to about 10% behind pace. It's not a huge amount, but it is enough for people to be aware that, like, you really have to compare your own pacing to it. The market is a little behind. There is vacancy in this market across the board. It's going to get really competitive. We are in the month for the month. You need to be making your moves, especially if you yourself are pacing behind now, because since the market's behind, you can assume that other people are pacing behind as well. When we look forward to July, this is about on pace. So this Galveston-Houston market area, probably driven a lot by Houston itself, has very short booking window, so we don't see as much on the books as in our Corpus Christi market. But last year, there were about 15% of occupancy on the books at this time. We're at 15%. We're not too far behind. Now, the concern here is we've had 3 months of trailing occupancy. We also have a little bit of pacing behind for June. I would suggest that you start looking at July now. This is a short booking window market. You have an opportunity to make some adjustments, but the kind of writing on the wall is that the market's down a little bit. It probably is going to continue to be down, and you don't want to wait till the last minute to compete, because if other people are down, you're going to be competing with a lot more properties than you want to. Now, let's just take a quick look at the highest performing listings to see how different the trend is. Honestly, we're seeing a pretty similar trend here. March and April are down, not down as much, but down a little. May, down a little. June, pacing okay, but still not, it's actually pacing a lot. This June is pacing a lot better than what's happening in the market as a whole. Same with July, you're about a third instead of 25%. This one's over 2/3 instead of about 50%. So these high performing listings are pacing better for the summer. Something to keep an eye on. Now, if we go over to the asking rates, let's see how people are pricing in this market. All right, so this is a big mismatch in my opinion. When we look at 2025, we see 2025 is pretty consistently higher than 2024. Now in Corpus Christi, where pacing's going pretty good, that seems pretty reasonable. You're really just looking for your opportunities to sell. Here, this indicates that the market is a little bit mismatched to what's going on. Basically, the market is pricing really high, but they're losing ground on occupancy. This is a huge opportunity for you to steal market share, especially further out. Obviously we're in the month for June. Prices are still high, but July, August, September, those are months where people's price is way higher, and you may not have to make big changes out there to really steal market share. And I think in an environment where occupancy is down, stealing market share is the name of the game, right? Now let's take a look at the highest performing listings and see that trend is here. Now, We do know that when we looked, these high performing listings in June and July are pacing quite a bit better than the market at large. We still see some same problems here. They're still increasing rates. You definitely see that in May. But the highest performing listings have seemed to shift a little bit in their strategy for June, July. They're still pushing rate a little bit, but nowhere near as high. And when you look out into August and September, you really don't see people looking out that far. So there may really be an opportunity, especially if your pacing's been poor or you have some shortfalls in other parts of the year, to try to make up some of that revenue by taking market share now for August, September, October, and really trying to drive occupancy there, especially in properties that haven't had good occupancy this year or didn't have good occupancy last year, because that additional occupancy, even if it's not quite at an ADR that you're satisfied with, is going to drive your total revenue and put reservations on the books. Before I leave you today, we're going to just take another little deep dive into just Galveston. The last market day we're looking at includes Houston, so that kind of urban and beaches kind of balance out. And the way I'm going to get to that data is I'm going to use the Wheelhouse Sets product. Wheelhouse Sets is a tool set that allows you to basically create a custom market report. There are some differences in the data. We don't include our direct source data here like we do in the market report, but we do inform what we're doing here. And this allows me to, instead of looking at Houston and Galveston, I can really just pull up a specific area and get the data for that area. Now, this data is going to be, I've gone ahead and built this already for us, and we're going to just take a look and see how different some of these trends are, see if we're kind of seeing the same things. But keep in mind, this sets tool is available to anyone, whether they're a Wheelhouse pricing customer or not. So if you're using Wheelhouse Revenue Management, you can obviously use this data. If you just wanted to get access to market data, sign up, create an account, and you can go and access specific neighborhood market data through our sets tool. If you're using our free performance analytics, it's obviously available there, and you can actually pull that data over to compare to your own data. Now, I've got a set pulled up. You can see that I've really restricted this down into this kind of Galveston area, and I've left out the Houston market. We can see some interesting data about how these are picking up. We can take a look at how people are pricing. But the main thing I'm going to do is actually go over to this trends tab. We're going to look at the same charts and just get a good high level estimate of kind of what's going on. You can see here that I have next year, last year, and this year, and we can get an idea of what's going on in this set. Now, this set does have some restrictions on it. I have filtered down so that I'm just looking at listings that were open most of the year last year. I also restricted it down to look at listings that were over 50% occupancy. I didn't want to look at all of the lowest performing stuff. So keep in mind, this is going to be a group of listings that are performing a little higher, probably much more similar to the high performance group in our market reports. And you can see that because overall occupancies are quite a bit higher. Now, looking at this, we can see some interesting trends, right? In just Galveston, we can see that Q1 was pretty solid, and spring was pretty good too. People were able to drive occupancy when we're just looking at Galveston. So there is an indicator that Houston itself was driving a lot of the drops in our market report. Galveston itself is looking pretty strong. It's honestly looking a lot more like Corpus Christi, which was pretty decent. We see pretty solid occupancy growth across March and April. May maintained itself. And then when we look at these summer occupancies, we are in a much better position here overall. Essentially, instead of being at like, halfway or 30, instead of being at like 30% of the way there or 15% of the way there, we're at well over half. So June occupancies in Galveston alone looking a lot stronger. The pace is a lot better. And that's really going to change the calculus on how you adjust pricing. When we look into July, we're well over halfway there, and that's looking pretty solid overall. So a lot different situation if you're on Galveston compared to if you're in the Houston area. Now, I've gone ahead and done that same method that we did on the market reports. That is available here on these kind of neighborhood sets that we've built. I can see these distribution charts. And I've gone ahead and taken that data and figured out where the pace was. So when we're looking at this Galveston area where pacing is much better than Houston and Galveston combined, last year at this time, this group was at 56% occupancy on the books. So June, pacing very, very, very well. When we go to July, The market was at about 40%, so pacing slightly behind there. So a little bit mixed. June is looking pretty good, while July is pacing a little bit behind. But overall, pretty good situation here. So really what it comes down to is, can you see your own pacing and how are you pacing? We probably expect, because the market is pacing pretty well, that we're not going to see huge collapse of rate position or, anything really different than last year, because people won't be panicking. It really comes down to how you are pacing. And since you know that the market is pacing pretty well, if you're not getting your fair share of the market, you need to start making some moves to do that now. Anyway, I hope you found that data super helpful. We do these data deep dive town halls periodically, so keep an eye out. We'd love to have you join us and talk a little bit about strategy. Quick reminder, Wheelhouse, we talked a lot about pacing. If you're having trouble finding your own pacing or seeing how you're doing, let us know. We'd love to get you set up with our free performance analytics, where you can see your sales, your pacing, your last year, your same time last year data for any group of listings in your portfolio. Super, super easy. We'd love to get you set up so that you're in the best position to make the most money you can. Thanks and have a great day.